Hello and welcome back to Token Trends Weekly. I'm your host, Max Ledge.
And I'm Sasha Coyne.
It is Friday, February 13th, 2026. And, there's a really strange vibe in the market right now.
It's a weird one, for sure.
Yeah, if you just, scroll through social media, everyone is miserable. It's all crypto winter 2.0. The retail crowd seems completely checked out.
Oh, definitely.
Yeah.
The euphoria is gone. The easy money feeling has just evaporated.
Right, but then you look at the actual news, the stuff we've lined up for today, and it's a completely different world. It's an explosion.
That's the disconnect. It's a total split-screen reality. The retail casino feels like it's closing down.
But the actual global financial plumbing is just getting switched on. We're seeing this massive pivot from speculation to real utility.
Oh, exactly.
So for today's deep dive, we've got three main parts. First up, we have to talk about this institutional pivot. BlackRock is on Uniswap. I mean, what does that even mean? We'll break down how that actually works. And then in part two, we'll look at the applications. We've got LayerZero launching just a mind-bendingly fast new L1.
And we're going to explain why AI agents, robots, are suddenly the most important users in all of crypto.
Finally, in part three, we'll hit the future perspectives and, the risks. The Wild West cleanup is happening. People are actually going to jail.
And we'll see where the smart money is putting its cash while everyone else is running for the hills.
It's a lot to get through.
Let's dive in. Part one, BlackRock and Uniswap.
So for years, the big meme was the institutions are coming. It was this mythical event.
And now they're here. The headline is that BlackRock's tokenized BUIDL fund is now live, trading on Uniswap. And the UNI token, it surged over 32% on the news.
Okay, but hold on. I need to pause here. Because when I hear trading on Uniswap, my brain pictures Larry Fink with a MetaMask wallet setting his slippage to 5%. That can't be what's happening, right?
No, not at all. And that's the technical detail that almost everyone missed. They are not using the Uniswap that you and I use. They are not touching the AMM.
The automated market maker. Explain the difference, because for most people, Uniswap is the AMM. It's just a pool of tokens and a math formula.
Right. And with an AMM, you're trading against that pool. The smart contract sets the price. But that creates a ton of problems for an institution like BlackRock.
Like what?
Well, first, if you're trying to move, say, $50 million, the slippage would be astronomical. You'd move the price against yourself and lose a fortune.
Of course.
Second, you're a sitting duck for MEV bots, for front runners. And third, and this is the big one, you have no idea who is on the other side of your trade.
Which is a complete non-starter for a regulated U.S. company.
Exactly. So what they're using instead is the UniswapX RFQ platform.
RFQ, request for quote.
Request for quote. Think of it like calling a broker instead of yelling in a public auction. BlackRock's system sends out a request saying, I want to buy $10 million of USDC. A network of whitelisted KYC-compliant market makers gets that request. They send back their best price, privately. BlackRock picks the best one, and the trade is signed.
So the actual deal-making is happening off-chain.
The matching is off-chain, yes, but, and this is the entire point, the settlement happens on-chain, instantly. The assets swap wallets atomically.
And that's the killer app. Settlement. T plus 0. You don't have to wait 2 days for your money like in the stock market.
Precisely. It's 24/7 liquidity with zero counterparty risk. The smart contract ensures it all happens at once or not at all.
It's incredible validation. They aren't just buying crypto as an asset. They're using the rails. They're using the actual plumbing.
And they're investing in it. They made a strategic investment in the protocol itself. It's exactly what Mike Novogratz was talking about this week. The era of easy 100x retail gains is fading. We're in the institutional utility phase now.
Right. The casino is becoming a bank. So, speaking of plumbing that can handle that kind of volume, let's move to part two. LayerZero's new L1.
The Zero Network.
Okay, I have to be the skeptic here. They're claiming this thing will do 2 million transactions per second. Per zone.
It's a wild number.
2 million. I mean, Visa peaks at, what, 65,000? Solana has a meltdown at a few thousand?
Right.
This sounds like pure marketing. How is that even possible?
I had the same reaction. It sounds like it breaks physics, but the architecture they've proposed actually starts to make some sense. They aren't trying to force everything through a single pipe.
So how does it work?
It's a multi-dimensional design. So imagine 3 separate zones that are built for different things. Zone 1 is your standard EVM-compatible chain.
Okay, the slow lane for all the old apps.
Exactly. Then you have Zone 2, global markets. It's stripped down and optimized for one thing, high-frequency trading. Order books, matching, that's it.
And Zone 3.
Global payments. That's the hyperspeed lane, built just for moving stablecoins and digital currency. By specializing each zone, they get rid of all the extra baggage and can, theoretically, hit those speeds.
And who's backing this?
ARK Invest and Citadel Securities.
Ken Griffin's Citadel, the biggest market maker on the planet.
The very same.
Okay, that changes the story. Citadel's entire business is built on speed. If they're backing this, they must believe they can run their algorithms on-chain in the future.
That's the signal, yeah. The ZRO token jumped because the market saw this wasn't just another generic Ethereum killer. It's custom-built for Wall Street.
But even with Citadel, 2 million TPS. I can't click that fast. The entire human race can't click that fast. Who is all this for?
And that is the perfect transition. It's not for you, it's not for me, it's for the AI agents.
The robots. I knew it.
Coinbase just announced they've deployed agentic wallets.
Agentic, as in for an autonomous agent, a piece of software.
Correct. These are crypto wallets designed specifically for an AI to hold, spend, and trade crypto without any human clicking approve.
So we're talking about a bot with its own bank account.
Essentially, yes. They're doing it on the Base L2 network. And Stripe is also previewing an integration where these agents can handle billing automatically using USDC.
Okay, ground this for me. What's a real-world use case for that?
Imagine you tell your AI assistant, plan my trip to Tokyo. Today, it just gives you links.
Right.
With an agentic wallet, you just give the AI a budget of, say, 5,000 USDC. It then goes and negotiates with the airline's AI, pays for the ticket on Base, books the hotel from the hotel's AI, and just sends you the itinerary. It's software paying software.
And that's where you need 2 million transactions per second.
Exactly. Billions of AIs making trillions of microtransactions for server space, data, electricity. Human speed becomes totally irrelevant. We are building the economy of things.
Yeah, it's fascinating. It just flips the whole crypto winter thing on its head. Retail is bored because a meme coin isn't moving.
While the infrastructure for a global robot economy is being built right under their noses.
Well, speaking of the human side of things, we have to touch on Backpack Exchange.
A very interesting one. They just announced their native token.
And Backpack is from the Mad Lads NFT team on Solana. Right.
Correct. And a huge chunk of the new token supply is going to those NFT holders, which is why the floor price for one of those JPEGs jumped to almost $2,000.
But the token structure is what's really strange here. They've built it around a potential IPO.
An initial public offering, like a stock market launch.
Yes. The token unlocks are tied to trading volume milestones, but also to a future public listing of the company's equity. They're blurring the line between owning a token and owning stock in the company.
It's a hybrid model. It suggests the future isn't crypto versus stocks. It's both, all in one compliant package.
Which is a perfect lead into part 3. You can't have IPOs and BlackRock if the Wild West is still running rampant. And based on this week's legal news, the sheriff is here.
Oh, the cleanup is happening. And it's brutal. The big headline was the sentencing of Braden Caroni, the CEO of SafeMoon.
SafeMoon, the poster child of the 2021 bull run.
He was sentenced to 100 months in federal prison.
100 months. That's over 8 years.
For stealing $9 million from the liquidity pool. The DOJ is sending a very clear message. We don't care if it's DeFi. If you steal money, you're going to prison for a very long time.
A far cry from the old slap-on-the-wrist fines.
Hmm.
And it's not just the U.S. South Korea is going after Bitham.
Right, that was a crazy one. They had a glitch and accidentally airdropped $140 million worth of Bitcoin to users.
140 million. Whoops.
A massive oops. And now the government is launching a full investigation into their internal controls. You can't have institutions coming in if that kind of stuff is still happening.
Exactly. So with all this cleanup, this winter feeling, someone must be buying, right?
This is the divergence. While retail is panicked, the so-called smart money is accumulating. Tom Lee's fund, BitMine, just bought over 40,000 ETH.
40,000 ETH. Wow.
And, of course, MicroStrategy. Michael Saylor just added another 1,100 Bitcoin. They see the fraudsters going to jail. They see BlackRock building on the rails, and they're buying before the work is finished.
It's the classic transfer from the impatient to the patient. And we're also seeing the Quile builders. Robinhood just launched their testnet on Arbitrum.
Which is huge. They have millions of users who they can onboard to Web3 without those users even knowing they're on a blockchain. It'll just be a feature in the app.
So let's wrap this up.
Yeah.
If you had to summarize this whole deep dive in one sentence, what would it be?
I'd say the get-rich-quick phase of crypto is over, but the change-the-world phase is just getting started. We're moving from play money to real money.
And that's usually where the real value is built. Before we sign off, I want to leave our listeners with a thought you brought up earlier.
The AI agents.
Yeah. If AI agents become the primary users of blockchain's trading, paying for services, how long until the majority of volume on-chain isn't even human?
And if the volume isn't human, does something like market sentiment even matter anymore? And AI doesn't FOMO. It doesn't panic sell.
It just calculates and executes. We might be building a future financial market that is perfectly efficient and maybe a little boring.
Or just unbelievably fast.
Something to think about. Are we building this for us or for the machines we're creating?
I think the answer is probably both.
Thanks for tuning into this deep dive. If you want to stay ahead of these trends, make sure you're subscribed to the Token Trends Weekly podcast. We bring this to you every single Friday.
Keep learning. And don't let the winter freeze your curiosity.
This has been Max and Sasha. We'll catch you in the next block.